Alright, boys and girls, welcome. In this video I'm doing a little bit of something different actually, but I'll see how we pivot around this video in particular. But I initially wanted to just make a video where I go over what has happened in the previous week. I wanted to cover how the first week of the month of October has printed. I wanted to cover how we, closed in regards with the weekly candle, and how we have finally cleared up Q1 and now headed to Q2, which is the first full week of October and CPI week as well. But I just wanted to go over the week that was. I didn't really want to cover the week to come. So yeah, but I think I might end up just doing both either way, like in a more weekly outlook video, and then by the time this video goes up, probably about an hour after or 30 minutes after, or even before, who knows, I might but I'm going live at some point today, doing a little bit of back testing and spending time with the chart while journaling my week. So yeah, putting all that aside, let's begin with the dollar index. So the dollar last week, basically this week, has done nothing but opened and just started climbing higher. Let me bring up the daily openings and stuff using the hourly time frame. We can see there, that's Monday, Tuesday, Wednesday, Thursday, and of course this is Friday, NFP Friday. So yeah, as you can see, on Monday we literally made the low of the week. Any retracement you got on Monday was just pushing dollar higher. So if you were trading something like USD CAD or even Euro dollar, yeah, see, USD CAD, but USD CAD did have a low of the week on Wednesday before climbing higher. So anything after Wednesday just started taking us higher. Every down close candle actually supported higher prices, and I think the same was true on the daily. Yeah, daily we dipped down, pushed higher, even creating a daily imbalance now, which could actually take us higher. But anyway, putting that aside for now, every day of this week was just bullish. Monday, open, low, high, close, open, low, high, close. We did not even retrace to any of these imbalances on the way up. So yeah, I thought because of that actually, and a few other things obviously from the higher time frame, I wanted to see if Friday was going to sweep Thursday's high, right, aggressively, and we got that. I actually didn't mind us pushing up first because I wanted to see that. I wanted to see Euro also tap into its weekly BC, which I was eyeing for a long time. But then I thought maybe after 10 o'clock we would then immediately reject all this move to the upside. I was expecting this before the end of the day, so that going into next week it's easy to, for me at least, easy for me to look for a market maker sell model until the initial consolidation here, which is very clear. If anyone is talking about consolidation, I think this here, right here, is a very clear consolidation profile. We just kept running higher, lower, like higher, lower, without any real direction. So yeah, I would like to see this ultimately, but of course, if price doesn't want to give it, then we will adjust accordingly. But that's what I'm looking for. When we go on a higher time frame, I am still bearish. I am still expecting price to drop, and you could find that CPI would be the one to finally push us down. Very possible, but I'm not going to stay here and say that this is the top. I'm very open for a manipulation during CPI and drop. I'm also open for a manipulation of the sell side liquidity during CPI, which is on Wednesday, then continue higher. Very open to any of those things, but it would be nice to see a drop which confirms a shift in direction and allows me to trade the rest of the week and actually the rest of the month. Yeah, it makes trading any dollar pair the rest of the month easier, in my opinion. So now let's go to a daily time frame. On a daily, we can see that we did in fact trade into that premium gap over there. Let me actually just use a line right there. We did trade into this premium gap here, which I was eyeing and wanting to see if it could be the point of resistance for price to push down, but it wasn't. So yeah, so be it. On the weekly time frame, we also tapped into this weekly imbalance, but now as you can see, we've closed above it, which is not a good sign at all for bearishness. I still believe this is the target. This is actually my target for the next few weeks. I don't even think it's going to take us all the way to December to reach this sell side liquidity. It's been the target for the longest of time, and I know I've been wanting it from this point, from the beginning of the year, and then we climbed up, then all this happened. But after this big leg down, I believe most assets have already gotten their manipulation leg. I believe most assets have gone through the possible high or low of the year, and yeah, I'm expecting dollar to just finish the job. When you go on a monthly time frame, you will see and notice that this is just a monthly imbalance. It's hard to get. It's been a while since we've gotten this. Actually, since the beginning of 2023, we've only gotten 2 monthly imbalances. Well, I guess you could say 3 because this was a BPR here. But yeah, we've only gotten this imbalance, which got disrespected, but eventually got re-respected here before dropping. And now, since that time, we've now gotten another imbalance on the monthly time frame. Again, a rarity, but I believe we won't spend too much time inside of this monthly imbalance before running to the sell side liquidity. Of course, we got that first, and then we actually have the proper sell side waiting for us at 99.578. So yeah, internal to external is what I'm expecting, and then eventually this one, which is the yearly gap. Let's keep in mind that it's still the first week and NFP didn't do much damage as I expected. It did move, it did inject some nice volatility, but it didn't do much. It didn't actually do much. So I still expect CPI and FOMC that's to come to give us more of a clearer direction on the dollar. Again, as I've already mentioned on a lower time frame, I don't mind seeing another sweep of the highs, but I'm ultimately bearish because these relative equal lows are too clean in my opinion, and the upcoming market maker sell model is very clear in my opinion. What I'm going to do as well is I would grade the possible market maker sell model. So when we do have the smart money reversal, which I don't know when it's going to happen, but let's say when we have the smart money reversal is basically when we have invalidated, when we have disrespected, this NFP imbalance. So when I see a 4-hour closure below this BC, this imbalance that we created during NFP, that's the time I would say that, okay, now I think the smart money reversal is in. I think the high of the range has been put in. But assuming this is the high of the range, right? Assuming that on Monday we just start slowly trickling down, I would then grade this as in quarters, maybe from the hourly time frame. I would grade this in quarters, and I would expect the 25% to be where the low risk sell to happen, right? And then even if I miss this, even if I don't really aim to take this trade, I would start looking for trades from the 50% and the 75%. There's no need to try and catch the top, in my opinion. There's no need to always try and get the best of the best entry. As long as you're now sure of more sure, not 100% sure, but more sure of the direction, why try to always catch the top and maybe potentially hit stop losses when you could wait and be sure of where the direction is likely to go and trade that instead, you know? So that, in my opinion, I would say wait for this imbalance to be disrespected, then wait for a clear structure, wait for a retracement, wait for a sweep of intermediate term highs, before pushing down, because we're likely going to get something like this, a sweep of weak highs, So you're going to get structures here on the way down on a 15 minutes or even this same 1 hour. So there's no rush in my opinion. We have the whole month to get that move. So yeah, that's my bias on the dollar. More extensive than normal. I actually spent an entire 10 minutes trying to cover the dollar index here, but it makes covering the other ones easier because I'm looking for the opposite direction on them. Take for example GBPUSD, very clear consolidation here, very clear choppy price action up here. So this would become my initial consolidation when we finally get the smart money reversal back to the upside. We did get a deeper push into the PDA raise I was monitoring, but that's not a problem because again, I was not looking for a clear respect immediately in this order block or in this imbalance. I said specifically that I would like to see a proper shift to indicate that we are now pushing up. I would rather enter from somewhere here in the leg, or somewhere up here even, to continue to that buy side liquidity that we have here. So yeah, there's no need to try and catch the bottom is what I'm trying to say. Even in this case, there's no need for that. When we go on higher time frames, we can see that this BC is being disrespected. We are soon to tap this one, but we still have room to run. We still have space to go. When we look at the euro dollar, we have a potential SMT actually going to form because we've now cleared this low that was created on the 9th of September. When you look at GU has not cleared that low. So potentially an SMT, potentially the dollar has already made the high and we're now ready to push up again from here. But I would like to wait for a lower time frame confirmation. Take for example, back again to euro. When we look at the monthly time frame, we see and notice here that we've tapped into the monthly imbalance, right? In other words, we've taken the previous monthly low, right? We've taken September's low. When you look at GU on the same monthly time frame, we have not taken that previous monthly low. So that could be an SMT inside of a high time frame PDA. That's literally the model that I trade personally, right? So if we got this SMT, what do we wait for now? We wait for a lower time frame confirmation, like an order block, which is a change in the state of delivery, or a fair value gap, right? In this case, we're working with a monthly PDA, so our lower time frame is going to be a daily. So if you wanna trade the euro, what I would be waiting for would be something like this. I would wait for a candle to close above a down close candle so that this down close one can be used as a bullish order block. So when we get a retracement to the body, we could look for buying opportunities. Of course, seeing how much room we have to run, we could get imbalances somewhere along the way. We could get other order blocks somewhere along the way. So there's no need to force trying to catch the bottom here. Rather wait for this change in the state of delivery because we've just been getting down close days since Monday, as we covered in the beginning of the video. We've just been falling off the whole time. So wait for a closure, a proper closure above a down close day. So let's say Monday consolidates, but Tuesday runs a previous down close day and even closes above it. This could be used as the first indication for higher prices, first entry for higher prices. So yeah, I need to tick everything. It will be literally below the opening price for the month because there is the EQ for this month of October. We would have taken the previous 20 days low if you're looking at the IPDA data range, and probably the previous 40 days actually. I'm not sure. I didn't draw out my IPDA here, but yeah, everything would align for you to take this trade. Will still be below. As long as we're below this EQ, the entries that you could find, even if not on the daily, you're probably going to find something on the 4 hourly or something on the hourly, right? So there's no need to rush it. There's no need to stress yourself. Let's actually set this as an alert. Yeah, let's set this as an alert. We want a closure above, and that's our monthly PDA going into daily for a bullish order block. Okay, cool. So now that that's sorted out, the same idea applies on GBP. Of course, we already have the SMT there with the lows. Let's actually draw it out in case it is an SMT. We have not created a swing low yet, so this is not a valid SMT divergence yet, you know, so a potential one. Yeah, so that's my idea on dollar measures. I'm not gonna cover AUD USD and NZD USD, but you would notice that we have structures, similar structure as euro and pound. So yeah, just do your homework on that and plan your trade accordingly. Of course, nothing is set to stone, and I'm open to the idea of us completely reversing and pushing to the downside. I just need a retracement in order to participate in the move down. So that's another possibility. I'm not going to just start flooring it. You notice that I have many conditions that needs to be met in order for me to buy this. I'm not going to randomly buy it. And the same applies with selling. Different conditions has to be met for me to be bearish on this. So yeah, that's my opinion on the dollar index. Now moving on to indices. Indices were actually interesting last week. Well, this week we tapped into that weekly imbalance and rejected nicely. Starting off with the Russell, we did exactly that. We tapped a weekly imbalance, so there's a nice trade actually to sell into the imbalance over here on Tuesday. After the markets opened, we just consolidated most of the day. Actually, we fell off here on the last day on Monday, but we retraced all that move to the upside. Then on Tuesday we just fell and closed completely. So yeah, that was nice. That was interesting. And now here, let's delete this alarm. Now here, when we tapped finally into the weekly imbalance, I wanted to see us close above it and then continue creating a structure to now finally start buying, but we didn't get that. We just basically somewhat consolidated inside of the imbalance, inside of this range for the whole week until NFP came, and finally we broke out of the range. I was watching this hourly CB. I wanted to see if it was gonna hold price and push lower or get disrespected, which we did eventually. We disrespected it and now act as a possible inversion to push higher. So yeah, so far we are rejecting. We are now respecting bullish PDRAs. I know this is an hourly time frame instead of 4 hour, but I just needed a bit of structure to show what has happened throughout the week. So yeah, if I want to participate in buying this, I would wait for a new 4 hour BC to be created somewhere. Anyway, it can just be here. Actually, it could be up here to participate on the buys. To that buy side liquidity, we have multiple buy side targets, so there's no need to stress. We should also remember that we have the imbalance that we created when the month opened. So this could be a possible area of resistance, a possible area of rejection. So I'm very careful with just blindly buying any imbalance I see on this leg of the move to the upside. So I'd rather wait for another confirmation, another BC to form before I can look for buys. So yeah, that's my view on Russell. It was actually clean despite the chop down here, which was expected, by the way. Mondays of NFP could be traded, but when it's on the last day of the month, it's a bit of a problem because you get this manipulation, get this huge wicks and stuff. So should be very careful on Mondays, on NFP Mondays that fall in the last day of the month. So yeah, I liked the fact that we fell on Tuesday. Then Wednesday, Thursday is obviously pre-NFP days, so anything is possible in those days, and I try not to even participate in them. So yeah, this was expected. All this price action down here was expected. Now moving on to NASDAQ. we had the same thing, a fall off here on Monday, and then a complete retracement of that move immediately, and then finally fell off on Tuesday. But I still don't like how we reversed, to be honest. I don't like how we reversed from Friday. Let's finish drawing this. All these failure swings, I don't like them. I don't like all these failure swings. Notice how we failed to sweep liquidity down here. So for me, why I say I don't like this is because most of the time the markets actually don't turn like this. Let's take a very simple example right here. When the markets turned around, you notice we just ran up and then fell off straight, not curve gently. So this makes me worry and panic a bit, because it makes me think, even though we have SMT here with ES, right? Notice this low, we failed to sweep it on NASDAQ, but on ES, we actually succeeded in sweeping it. Let's remove that, put that over there, and that over there. You see that? We swept the lows. So yes, we have an SMT at the lows, but I don't like all the failure swings that we created on the way up. So this makes me worry and think that maybe CPI in the coming week might actually sweep all these failure swings before finally pushing up. So I would not be surprised at all if we get some sharp move down, then the real turnaround happens for us to push higher. I would not be surprised if we get this. But at the same time, if we are going to continue pushing up on the indices, I've already pointed out a cleaner index, or a cleaner index that I'll pick, which is Russell, for me to be buying. This looks better because yes, we curved also to the upside, but we didn't spend too much time at the lows. We just swept liquidity and continued and waited for NFP to inject volatility. That's all we did. But here we spent so much time. Even after NFP, we retraced by so much, taking NFP's low and then coming back again to NFPI. That doesn't make me too happy, to be honest. If NFP came out and we displaced above this and even disrespected, let's say, this body candle here, right? And then we came and maybe retraced on the body and continued higher, then this would be fine. This would have been much more acceptable, in my opinion, than retracing the entire move of NFP then coming back again. So I don't like this, to be honest, and I'm open to this liquidity sweep happening here. I'm very open to it because we have all these engineered sell-side liquidities. So yeah, let's keep that open mind, even though I'm bullish, even though I'm waiting for internal to external on the weekly time frame. And I think all of them actually have that same structure. Yeah, even ES has the same structure. Weekly, internal to external range liquidity, which is from this BC to the buy side there, which is the all-time high in this case. And I pointed out the 6,000 psychological level up there, in case we get overzealous and push to the upside. So yeah, that's all I have on the dollar majors and the indices. I have nothing on currencies. I have nothing on commodities, but I am watching them all. And I do know that next week we have NZD news, rates, I think, rates and a few other things next week. So there might be some interesting setups on exotics, on cross pairs, for example NZD card. Just by blindly looking at it without any preparation whatsoever, we could watch out for this imbalance. We could watch out for potential SMT to be formed. This is actually USD card. I don't know why I thought this was NZD. This makes me worry about the dollar next week, but I'm not going to even set an alert on it. It's gonna make me paranoid. But NZD should look, what is this alert for? I wonder what this alert was set for. It's a weekly crossing. I guess I was waiting for a weekly imbalance or something. Market maker buy model. buy side liquidity, but a very sharp way to begin the month. Very, very sharp. What about AUD CAD? I see AUD CAD has an imbalance on the weekly. Okay, this might actually be interesting. AUD CAD potentially going to tap this weekly imbalance. NZD CAD has already cleared the previous daily low. I hope that's not going to be an SMT, because I would like to see a tap of that weekly imbalance. Then the rates might push NZD back to the upside, taking that buy side liquidity, and this could just be taken as a potential run on stops, run on sell side, right? Something like that before pushing up, but we'll still keep the SMT in the process. Yeah, that'll be interesting. Let's just see how that goes. Yeah, let's see how that goes. I don't know. I actually didn't prepare for anything, but I definitely was not watching cross pairs. So I expect anything here. But I'll see. If I see something interesting in the week, I'll definitely make a video about it and update you guys when necessary. I can't say every single day, because some days might just be a small range day and nothing is to be talked about. So yeah, I will update when necessary. Looking at the economic calendar for next week, we can see Monday we only have an orange folder news, and it's just the minutes, the summary for the policy and stuff in Australia. And then we got the cash rate statement. Yeah, nothing much next week. Got CPI, of course. I know we have FOMC here, but it's just the minutes as well. GBP, got the GDP numbers coming up, and some CAD news there. So a very, very just okay week next week. Nothing aggressive, nothing to worry about, nothing to get too excited about either. But the third week, we have CPI all over the board, NZD and GBP and CAD all at the same time. So the third week looks more exciting than the week coming now. But yeah, that's all I have. If I have anything else to say, I will point that out in the week to come. But for now, look after yourselves, enjoy your week, enjoy your weekend, and yeah, make the best of it. Make the best of it with your loved ones. I will consider going live today, as I've already mentioned at the beginning of this video. So it depends. If this video comes out first, then the live stream will be following. If not, then it is what it is. Yeah, take care. Bye bye.